what markets are telling us is they are inputting higher risks of a global recession. This is what oil prices are telling us. And it may, in the short term, look like good news because obviously oil prices would have lower inflationary pressures on the US market. But in reality, they are pointing in the direction of a recession, and this would be terrible for the American economy and even worse for the global economy. Markets in the US, markets in Europe, markets in Asia are rattled. They are rattled because the measures announced by the Trump administration are much tougher than markets thought they would be, because they are universal, because they are not targeted, and because they are not based on economic facts. And all of this is having a very negative effect on markets. They are discouraging investors. The US should rethink its strategy, that the US should touch the pause button, should take a hard look at the facts, and the facts are pointing in negative direction, negative for the US citizens, negative for investors in the US, negative for business in the US, with huge ramifications for the rest of the world. Pause button now. Let's not forget that a big part of the purchases of European defense equipment comes from the US, that a lot of the companies in the US were betting on a growing European market. What they are telling them is that obstacles are not good, tariffs are not good for the transatlantic defense markets. And in general, what markets are saying is that tariffs are not good. But let's make sure that we listen very carefully to what the rest of the world wants, because today the rest of the world also matters and also counts. If one looks at the economy, if one looks at finance, if one looks at trade, clearly the US is very important, but it's not the only actor internationally. So I would be very careful to declare things dead just because the current US administration is not interested in keeping it alive. Let's look at what the rest of the world does.